Crypto Billionaire 69 back after a long awaited period, my friends. There hasn't been much to update in the markets lately. We have just been in a simple downtrend, so making daily update videos really hasn't been top of mind, but we have seen some recent upward action. It's funny because when I started the video, or when I first looked at it, it was at up 44%. Now it's up 46%. So that's the thing. As we get into these lower prices, we're going to start to see some major movement to the upside, because it takes a fraction of what we would be needed at higher levels to move the same percentage at a lower level, if that makes any sense. My friends, I have not talked to you guys in a while, and I'm excited to be back. So let's get straight into the charts. We are on the daily candles. We are seeing some volume. I have not been looking at the charts recently because, as you can see here, we have been consolidating around these 4 levels or so for a long time, weeks. And now that we have broken through, we are seeing some nice upward action, which we will go into right now. Is that a good sign? Is that not? Let's get into it. So I'm going to draw out the Fibonacci real quick so we can see what we're looking at here. Alright, as we can clearly tell, we have broken through this 0.786 level. So what does this mean? This means we need to regain at or above this 0.786 level within the next month. Okay, within the next 4 weekly candles, we need to be above these 5, 9 levels, 6 levels, to be more realistic. Even 6 levels, because that is where these have touched multiple bottoms. So to be the safest, if we can regain and push higher than these 6 levels within the next month, then we will be looking at a fake out. Okay, that means this has been faked out, and all of the people who sold for a loss here are going to be beating themselves up. All the people who bought in at this lower levels, if you're buying in right now, kudos to you. That is very, very, first of all, it takes a lot of nards to do something like that, especially whenever everybody is talking about how crypto is over. If you look around, everybody is in fear right now. And I mean, it's easy to be in fear right now. The prices are rising, inflation is going through the roof, and it's almost like we're going into a recession, right? But that's the thing. Within the next year, we're going to see major asset classes, not only in crypto, but in real estate, stocks, everything, decline a lot. And we're going to see it's going to be the time that you want to start investing your cash reserves so that you can make generational wealth. Because getting in at these lower prices in these newer and older asset classes is going to make a major difference over a long enough time horizon. Okay, my beautiful friends. This is not financial advice. This is simple crypto opinions from Crypto Billionaire 69. Okay, I want to let's look back. Let's rewind. I don't remember which video it was. I know it was a couple months ago. But all of you OGs who have been watching these videos for a while, remember when I was saying Bitcoin, we weren't seeing enough pain around. Let's look at these levels real quick. We weren't seeing enough pain around these 30,000s right here, around these 28, 27s. We really weren't seeing enough pain in the markets, because if you remember the Crypto Fear and Greed Index, it was in extreme fear as well, but it started hitting that neutral point at some time, if I am remembering correctly. And it was only natural for it to go down another step to really, really shake all of the people that think they can hold, but they really can't because they have to pay their bills off before we move again to the upside. Looking at this, it looks like a huge drop off, which it is. But what happens in huge drops? What happens most of the time in huge drop offs? This happens, okay? We normally see a bullish rally right after a major drop off. That's just how the markets work. Because in order for the markets to continue to go up, they have to go down. Now, if you look at the overall trend, we are still in an uptrend as we're breaking this horizontal line, this horizontal 50-50 line here. Okay, this is an acute angle, and the top of it, we're still in an uptrend. Now, if it breaks through the complete bottom around these 4,260 levels, all right, I'm not saying that's not possible. Is it very highly unlikely? Absolutely. That is very, very highly unlikely. But if it breaks through those 4,200 levels, then I do think we have a problem. But right now, along with let's look at the Dow Jones. I haven't looked at this in a good while. All right, this is the max. We are in a dip, okay? We're in a dip. This is normal. We have seen it in the past year. Now, this was 2008. Okay, what happened after 2008? Just continued to go up, okay? Now, could this be a black swan event where the whole market crashes and it just reverses and continues to go down for the rest of our lives? Absolutely. Is that realistic? I don't think so, okay? So, as you can see, in the start of the stock market, very slow, as compared to what it is today, right? This looks very stagnant and consolidated, kind of like what we're seeing on the daily candles on Dogelon Mars. Now, this is Bitcoin, but like this almost, stagnant and consolidated. But if we zoomed in to just back in this time frame and put it out of context, put all of this away, this would look like this. It would look like this. Now, zoom out again, okay? Zoom out 30, 40 years. This is going to look like this again, okay? Or I could be completely wrong. Because I am basing all of my assumptions on historical facts. Okay, now, if history doesn't repeat itself and a new event occurs, like the fall of the United States, for example, that could overturn all of these assumptions on their head. Because, if the United States falls, then everything will fall with it. However, let's assume that doesn't happen within the next 40 years, and the United States somehow keeps its head on its shoulders. I have faith, and I believe that will happen. That means that we are very likely to continue to just go up in the stock market. Now, cryptocurrency is worldwide, like the stock market. But it has the thing about cryptocurrency is that it has no real value, okay? The value in cryptocurrency is only what people put on it. Now, if you remember, back in these times, we were seeing a lot of media covering cryptocurrency and how good of an investment it could be, all right? So what did that do? It drove the prices through the roof, okay? Now, what media coverage are you seeing on cryptocurrency? It's all about inflation. It's all about how the market is going to crap and the United States is going down, okay? Think about it. So what is that naturally going to do to the markets? It's going to push them down. Now, listen, if you listen to the media 100% of the time, you would be broke 100% of the time. If you listen to the media when they said get in cryptocurrency, look where you would be at today. If you listen to the media when they're talking about Now, I'm not saying the facts that they present are not relevant on a day-to-day basis. All I'm saying is that take the facts that they present in a context that is the masses of people's, that is their opinions right now in the markets. Because whatever they see shapes how they view the world, okay? So, if all we're seeing right now is negative stuff about our economy, what do you think is going to happen to especially speculative asset classes like cryptocurrency? They're going to drop a lot. But what happens once inflation starts to slow down, once the economy starts to pick up, we actually have workers again, we're making more money, and the news, the media starts covering different things, and our economy starts to recover. I'm not saying that will happen within a few months. That might take a year. It might take 2 years. We could be going into a recession. Honestly, I don't know. I have not lived through a recession, and while I was studying the stock market, okay, I have not been through that in my lifetime. However, I have learned from people who have been through that in their lifetime, and their major lessons that they took out of that was to just continue investing, okay? Just continue to average in. Because as we get lower, think of it. The most risk you can put on yourself as we're spiking is to sell. Why is that? I mean, the most risk we can put on ourselves when it is spiking, when we are in a bull market, is to buy. Because when we're in a bull market, such as right here, we have seen major buying pressure, which means we are nearing a high. Now, the most risk we can put on ourselves in a bearish market is just the opposite, to sell. If we sell our bags at a lower price, we are risking more than if we just bought more, because we will be selling at a lower price point. We'll be selling closer to a low than a high. Now, buy high, sell low, okay? That's real easy. But it gets hard when you add in human emotion, and bills, and family, and the wife, and the girlfriend. If you're trading these sort of things and you have people around you that don't 100% believe in this sort of stuff, it's just best to keep it to yourself, because you don't want opinions of people who don't know what they're talking about to affect your decisions. Especially if they are emotional opinions. Get those people far away from your any of your investments, because unless they have experience doing what you have already done. You know what I mean? Unless they can mentor you through their own experience. Just don't even take, you can listen to what they say. And honestly, you have to listen to what they say. You can't avoid all these negative comments. You can't avoid the news. You can't avoid the person down the street that you overhear talking about how high gas prices are. You really can't avoid that. But what you can do is realize you can use that information in a different context. Everybody's complaining right now, which means we are closer to a low, or we are closer to hitting a low. We are going in that direction. Then we are closer to hitting a high. Chick-fil-A story. All of you OGs know this story. I was driving through the Chick-fil-A drive-thru, and this kid was talking about Shiba Inu, and I decided to sell it. The next week, it took a beating, okay? The week after that, it continued to take a beating. Why? Because there was no one else to buy it, and the market was extremely high. It's the complete opposite right now. You go through the Chick-fil-A drive-thru. Most of the drive-thrus right now aren't even fast because they don't have enough workers. Now, what does that tell you? That tells you that our economy is hitting, okay? It also tells you that people right now are very scared to put their money where their mouth is because they think they're going to need it. And they very well could need it, But if you have cash reserves that you have been waiting to deploy on very good investments, within the next year, it is important for you to watch out. Whether that's in real estate, if the prices in real estate start to decline, then looking at real estate prices within the next year will be extremely valuable to you and your family if you decide to deploy those assets, which is your money, into buying real estate, or buying crypto, or buying stocks. Time in the market is better than timing the market. All right? Now, that is for stocks. Real estate, I don't quite know. I don't have the first-hand experience from it. I am speaking from the knowledge that I have gained from people who have done it. Okay? I have not done real estate firsthand. I have done crypto firsthand. But it only makes sense in real estate to wait for the prices to drop, just like stocks, in order to get in and then ride that back up as the economy starts to flourish again. And will it start to flourish again? Yes, of course. Unless we go into World War III. In that case, we might just have a different economy at the end of it. But land, gold, and silver, baby. I don't know about crypto. Okay, let's think of the worst case scenario right now. I like to do this. It's called negative visualization. Okay, it's a stoic technique. If you don't know what that is, that's okay. But you visualize the most negative outcome that you can possibly think about in your life, so that if it happens, you're ready for it. And you're not just blinded. Okay, the most negative outcome that we can possibly see right now is the United States falling, or going into war and then falling. What will that do for the companies? Well, first of all, the stock market would completely tank. The crypto markets would completely tank. We would probably see that $4,000 Bitcoin, to be completely honest. Now, do I know this for a fact? Absolutely not. This is all speculation, but I'm just saying from a logical perspective what would probably happen. Most assets would decline in value because they are at risk of being taken. Now, crypto's not really on that spectrum, but they are at risk of being taken by another country, or whoever we're going to be a war at if we go to war. So the worst we can possibly do is lose all of our money and die. But let's say that doesn't happen. Let's say we're looking at it from an optimistic point of view. So, flip it on its head. Positive visualization, right? Okay, first of all, if we lose all our money and we die, well, that's that. Let's say we just lose all our money. Okay, let's go there. Everybody loses all of their money in the assets that they put in. That would suck. That would suck. But there's recovering from it. We can always make more money. As long as we're alive, we can always make more money. So, it's not too bad at the end of the day. It's not too bad. The most negative is not too bad. We just lose all our money. And the United States falls. And then we will hopefully be alive still. Now, let's flip it on its head. This is kind of all over the place. First video back, and I'm excited to be here. But this is what I like to do when I'm unsure in certain situations. I do this one. This is one out of many techniques that I use in order to just realize that I put stress on something that really shouldn't be that stressful. Because what are the odds of the United States falling and this actually going down all the way and us losing all of our money? It's very low. To be completely realistic, the more probable outcome would be that this, even if we do go into war, we will come out the other side, and eventually our economy will return back to a flourishing economy. Now, let's say we don't go into war and we're completely just, prices are rising, consumers aren't buying, and supply is down, right? We have problems. Will they get fixed? Yes, they will get fixed eventually, because people will fix them because money's on the line for these big companies, and they need to fix them in order to make more money. So over a long enough time horizon, we should see, just like we have seen in the past, a continual uptrend. Now, Dow Jones, all right, we have seen a dip. Honestly, I've seen a lot about this, and I've seen a lot of media coverage. I've heard a lot of things, and looking at what I've seen on the news compared to what it actually is, compared to the entire graph, it's almost laughable. They put so much stress onto this. But why? It's because they want your attention, because your attention makes them money. Just like you're watching this YouTube video, there's ads, I don't place the ads, YouTube does, that are in the beginning of this video, which makes YouTube money. It's the same thing with news stations, or whatever form of media that you watch, okay? Unless you are watching or consuming a non-profit form of media, that actually sounds like a great idea, then most of the media that you are consuming is biased based on what would get the most attention at this point in time. Now, we're down to 41% again. Okay. Dogelon Mars. What we are seeing, let's get into the analysis. This is kind of, if you have stuck around for this long, I miss you too, my brother and my sister. And let's get into this analysis, because that's what you came for. So we have seen, I'm going to drop it to the 4 hourly candles. 4 hourly candles, baby. Major volume, push up. I wonder what the catalyst was. I really wonder what that catalyst was. We're seeing that volume has been here. If you look here, volume has been higher in this consolidation than it was in a previous consolidation around these 6 levels, which is normal because people can buy more whenever it's lower, okay? So I guess that is normal. Looking back, we are creating, I can't really go back, so we got to look at these daily candles. I want to get a nice base point that we need to judge this off of. So this is really moving back into this area here. This previous support. Now, in these 2 daily green candles that we've seen with volume pushing up, first of all, it's nice. It's looking nice. Why is it looking nice? Let's actually see. I'm going to draw this down. Okay. So this is the trend that we are currently in, all right? Downtrend. And that's okay. Once we break through this, then we will see, that's called the breakout. We will break out of this downtrend and start to begin an uptrend. Okay, so we just need to wait until we hit these 7 6s again. It's really simple. Now it depends on what your trading strategy is. I am still holding all of the bags that I have accumulated throughout this previous time period. And I am still averaging in more. The last time I averaged in was around these 4-3 levels, I do believe. I'm very curious to see if this is a fake out, though. If it is a fake out, we should see these 5 levels reclaim very quickly. So that is what we need to keep our eyes out for, is the reclamation of these 5 levels. Okay, pushing higher than this little consolidation that we've seen for a few weeks in the past. With the height of it being around these 6-2s. Alright, if we can move through these 6-2s again, it's a very, very good sign that this is simply just a scare tactic to scare the weak candidate out. Okay, now, if it doesn't move through these 6-2s, let's say it comes up to these and bounces down, as the Dow Jones is continuing to the downside, that could mean that we very well could see lower prices in the future. We could head down to these 2s again. But that is just what we need to watch at this moment. Overall, if, let's say, in the stock market, even in the crypto markets, if you bought on every dip, you would be sitting pretty right now. You wouldn't need to watch these videos. In other words, you would be fine. Okay? So, that's just a simple rule that all of the big investors go by, because that is how you make money. You buy low and you sell high. So, crypto being ooh, man, this AC is very, it's very humid here where I live. And this AC just takes that humidity right out, so it's completely dry. And I just woke up. It's currently 6:44 in the morning. I'm trying out this new, it's called nightmare mode, where you have no social media, you can't eat junk food, you can't watch TV, you can't, alright, I'm actually going to look at it, because there's a bunch of rules that me and my buddy are doing it. Alright, if you made it to the end, alright, I challenge you, if you really made it 26 minutes in, I challenge you to try this. Number 1, so there's 10 rules, and the 10th one is still up for grabs. I'm going to do it anyways, even if my friend, his name is Santiago, doesn't want to do it. So, listen up. Here we go. The rules for nightmare mode. Number 1, no ejaculation. Number 2, no video games. Number 3, no social media. Number 4, exercise every day. Number 5, wake up at 5 a.m. every day. Number 6, no drugs or alcohol. Number 7, meditate for at least 10 minutes every day. Number 8, drink only water. Number 9, only eat food that you know provides value to you. Number 10, focus on accomplishing one major thing in your life until you achieve it or the 30-day cycle is up. Those are the 10 rules, and if you break even just one of them, then you fail. Okay? And whoever fails this competition that we have created has to do 20 push-ups. Now, it's not a lot, but it's more about the competition. Me and him are very competitive people. But I challenge you, 27 minutes, 16 seconds in, to do this if you are feeling up to the challenge. Number 1, no ejaculation, no video games, no social media, exercise every day, wake up at 5 a.m. every day, no drugs/alcohol, meditate for at least 10 minutes a day, drink only water, only eat food that you know provides value to you, focus on accomplishing one major thing in your life until you achieve it or the 30-day cycle is up. Now, it seems easy, but we'll see how it goes. Crypto being is 69, 28 minutes. I love you guys, especially all of you who have watched this long. I will catch you guys in the next video. Peace.